Welcome to The Explainer. Today, we're tackling the ultimate wealth-building showdown, real estate versus mutual funds. Let's dive in. Imagine you have 10 lakh rupees sitting in your bank account right now. Do you buy property or invest?
Let's look at two friends, Rahul and Ankit. They both kick off their investing journeys with exactly 10 lakhs.
Rahul goes all in on the classic real estate dream, aiming for a physical property worth 50 lakh rupees.
His practical move, he drops his 10 lakhs as a down payment, takes out a loan, and rents it out.
But here's the catch. His monthly EMI on that 40 lakh bank loan is roughly 30,000 rupees.
He gets 20,000 in rent, meaning Rahul pays the remaining 10,000 out of his own pocket.
Okay, now let's check out Ankit. He takes a completely different, highly practical approach to building his wealth.
Ankit practically splits his 10 lakhs across nifty small, mid, and large-cap mutual funds. Pure diversification.
By doing this, he's targeting a solid, consolidated long-term return of about 15%.
Now let's fast forward a full 30 years. Who do you think comes out on top?
Rahul's house hits almost 3 crores, but Ankit's stock portfolio, it explodes to over 6.5 crores.
But hold up, there's a massive, overlooked variable here that literally changes everything about this math.
Remember that extra 10,000 rupees Rahul had to pay out of pocket every single month for his EMI?
What if Ankit took that same 10 grand and practically invested it into a monthly SIP? Hello, compounding.
While Rahul just burns cash maintaining his loan, Ankit is actively funneling $10,000 into the market.
This practically illustrates why SIPs are game changers. That monthly habit adds another 6.92 crore to Ankit's stash.
Combine the lump sum and the SIP, and Ankit's total wealth skyrockets to roughly 13.5 crores.
That is a staggering 10 crore rupee difference in pure wealth. The numbers are just wild.
So, what's the takeaway? Does this mean buying real estate is a terrible idea? Not exactly. The crucial detail from our source is that both guys already owned the homes they actually lived in.
Buy a house to live in, but invest your money to actually build wealth. That's the golden rule.
First, secure your primary home. Then, practically allocate your cash into diversified market funds and SIPs today. The real question is, how will you practically invest your next 10,000 rupees to secure your financial future?